All right. Welcome to Coffee with Marcus or Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. If you have missed that East Texas German accent, then you're in for a treat because Marcus will be back with us tomorrow. But today, I'm going to cover what's happening in these crazy markets, how we're trading them. Today is Tuesday, September 3rd. Stocks finish August higher, but stocks are getting hammered right now on the first trading day of September. NVDA is down 6%. Steel moves lower. Oil slides. And this week, it is all about jobs. Plus, we'll take a look at our open position. So if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and let's go ahead and get started. Now, let's go ahead and bring up the S&P 500 here and look at this. So, finishing nicely on Friday, up 1%, up right near all-time highs, record highs for the S&P. Not on Friday, but getting up there. Today, we started a little bit lower, and actually, let's go to a 5-minute chart. We could see that it's been nothing but selling since. So after a nice rally on Friday to end the week, Monday, U.S. market holiday, first trading day of September and the week today, which is Tuesday, of course. Look at this, opening lower and sliding and sliding. A little bit of an acceleration to this move lower here right around 10 a.m. We'll look at why that took place. Maybe just maybe finding a little bit of a bottom, but so far it's been a pretty nasty day. Right now, the S&P down 1.4% for the trading session. The Dow down 1.1% after making record highs on Friday. And then the NASDAQ having a hard time getting back up to those records that we saw in July. And since then, not participating in the recovery like the S&P or the Dow, which was making highs, of course. And right now, the NASDAQ leading the way lower, down 2.25% as I speak. Now, let's go ahead and also take a look at, well, let's actually talk about September. So, September, is it going to be another nasty September? And share your thoughts. I'm curious. Do you think that September is going to be a losing month or a winning month? And historically speaking, the odds are saying that September should be a negative month. Of course, anything can happen, things can change. However, in the last 10 years, September has been the worst month for the S&P 500, down an average of 2%, according to FactSet. So we'll have to see if that remains true for this month. Right now, following in the footsteps of 10 years of history, the S&P and the markets in general just down for the session. Actually, let's look at the markets in general. Go to the heat map here. Here we have a heat map of the S&P 500. Surprisingly, I have to say that this surprises me because with the markets down 1% plus, you usually see mostly red. I want to refresh this, make sure that we are connected. And yeah, so it seems like we're getting a move into consumer defensives, maybe some healthcare stocks, financial services, a bit mixed, but technology taking a big hit, oil and gas taking a hit, industrials taking a hit, and NVIDIA down 7.5%. So if we look at the Magnificent Seven, NVIDIA down 7.5%, Microsoft down almost 1%, Apple down more than 2%, Google down 2.5%, Meta down almost 2%, Amazon down over 1%, Tesla out of the bunch, the only one positive right now for the trading session, up 1/3%. So bucking the overall trend, but not a whole lot of excitement there, up just 0.3% there for Tesla. Interesting to see this green though, because normally when you see a market sell-off like this, S&P down, Dow down over 1%, NASDAQ down over 2%, you see red across the board, but it does seem to appear as though it's a little bit of a shift from tech and maybe industrials, oil and gas into some consumer defensive healthcare and financial services. I mean, this is where you look at the NASDAQ and it's pretty much all red. You look at the Dow and it's a bit mixed, right? Even though the Dow is down for the session, Verizon's up 2%. Visa up 1.4%, J&J up just under a percent, UNH up 1.5%. There's some green here in Walmart, Procter and Gamble, and Coca-Cola. So interesting to see that. Let's take a look at the economic calendar here. And I mean, we could pop over to earnings because earnings season has really come to an end. We wrapped up that final push there with retail earnings, and it was interesting, a little bit mixed there. But this week, really slow. We have Zscaler Tuesday after the bell. On Wednesday, this is when we have the most activity: Dollar Tree, Hormel Foods, Hewlett Packard. But Thursday is probably the biggest day. AVGO Broadcom is reporting, at least the biggest day when it comes to who might be reporting earnings and the size of that company. Let's look at the economic calendar, though, because this week's all about jobs. We see here that Wednesday, JOLTS job openings. We have Thursday, ADP non-farm employment numbers, JOLT jobs, and ADP non-farm employment numbers actually getting pushed back a day from normal because Monday was a holiday. So we know that ADP non-farm number normally comes out Wednesday morning. This week it's on Thursday, though, with unemployment claims. And we have this Friday report, the big jobs report, including average hourly earnings, non-farm employment numbers, and the unemployment rate. And this is where investors might be a little bit on edge this week, because the last time we had the jobs report, this is what the chart looked like. Thursday, we started to slide. And then Friday, we gapped down and we ended the week lower after a weak jobs report that had consumers and investors wondering if maybe we're seeing weakness in the economy. And that's when the discussion about a recession crept up again. So it seemed like we might have been out of the woods recession wise, or the soft landing actually being the more likely scenario there. But after that weak jobs report, it had investors wondering if maybe that wasn't the case, and maybe the Fed has kept rates too high too long. And then on Monday, of course, you had that nasty open, and then look at this chart, the perfect V-shaped recovery and getting right back up to those levels. All things considered, even though today's a pretty nasty day, we're trading right inside of this range here that we've seen over the last couple of weeks here. So this week, it's all about jobs and exactly what we will hear is to be determined. Let's look at the CME FedWatch tool and just see if this is having any impact on probabilities of a cut. It has shifted a little bit. We were at 35% for a half point cut, 65% for a quarter point cut for a while. And it looks like with a little bit of weakness today, Fed funds futures have changed a tiny bit. And I take that with a grain of salt, but it definitely shows that right now investors are counting or factoring in a quarter point with the possibility of maybe a half point cut, and then another cut of a quarter point or half point, depending on what happens this upcoming meeting, and then another cut after that. We'll have to see what the Fed decides to do. We'll get this news 15 days, 2 hours, 49 minutes, and 10 seconds from today. Going back to the charts here, and this is where there are some interesting moves taking place. Crude oil. Look at crude oil slide here. Crude oil down to just under $71 a barrel. This is a 3.75 points of a drop, almost 4% drop in crude oil. And maybe even more significantly here, it looks like this 71.50, 72 level has been support for a while. This is the lowest we've seen crude oil since actually going back to January. So the beginning of the year, crude oil was trading, the very beginning, we were trading around 71, 72, right now at lows that we haven't seen since January, since the first month of the year, and getting through some support levels here. So is that a concern about supply or demand or the economy, or all of the above? Probably all of the above. Maybe a little weakness there. Maybe there aren't the same concerns over supply issues, and also when there's potentially a weakening economy globally, or in the U.S., you get a drop in crude oil because in a slower economic environment you use less energy, and maybe that contributed with some of the data that we had today, leading to this drop. So speaking of data, didn't expect for this to be much of significance today, because the focus is on jobs this week. But we see ISM manufacturing PMI coming in with a reading of 47.2. Now this is a few ticks lower than the 47.5 forecast, but readings below 50 indicate contraction rather than expansion. And here we see we could use our friend Rocky here to give us a little information. One of the features here that we have in PowerX Optimizer, we see that this ISM manufacturing PMI index is a key economic, let's go here. A key economic indicator that measures the economic health of the manufacturing sector in the United States. It's important for the economic activity gauge. Expansion versus contraction, and readings below 50 indicate contraction. Business confidence, inflation insights. Here we could just go to the conclusion. The ISM manufacturing PMI is a critical indicator for understanding the health of the manufacturing sector and the broader economy. Nonetheless, lower reading here, a little bit better than the previous, but lower than what was forecast. Manufacturing prices ticking up, 54 versus the 52.1 expectation, and construction spending lower, minus 0.3 versus the 0.1% increase that was expected. So is this shedding some light on a weakening economy? Well, maybe. But what we can say for certain is that if we go to a 5-minute chart and we look at this drop here, we opened lower and we were falling a little bit. And then when this report came out here, we had a push lower. We made session lows and we continued to slide. So again, right now might be popping off session lows. Maybe we have a little support there, but definitely a red day for us. Now we could take a look at a few other market movers here, and we could look at U.S. Steel here. And actually, let's go to PowerX Optimizer and look at it with our wheel settings. So U.S. Steel down and gapping down 4% here. And this comes, we had this big spike here and then it pulled back, and this whole movement here recently is tied to a proposed takeover by Japan's Nippon Steel, which now over the weekend Kamala Harris had mentioned that she is opposed. She's opposing this potential deal, saying that U.S. Steel should remain American owned, and U.S. Steel fell pre-market, but some other names also falling. Nucor down today 4% on this information and news, and part of this also could be a little bit tied to maybe a weakening economy as well. So some concerns there going into this week in the jobs report, but 4% lower in Nucor. Actually, this was one of my favorite potential trades today. Looking at Nucor right now, You have the 140 strike available for next week, the 141 for this week. I have really liked this zone here for potential support, trading around 141 to 132-ish. And this is where I think that the 141 right here or 140 looks pretty good. I definitely prefer a Nucor over US Steel. So a US Steel with this chart here, and then also, there's a sympathy move maybe because of this news in Nucor, but that the potential deal here with the takeover bid and it falling through with US Steel versus Nucor, which didn't have that gap and instead has been trading in these pretty nice ranges over the last couple of years with some stronger support here. I also believe that the income statement looks a little stronger for Nucor. 5 consecutive years of net income, 5 consecutive quarters of positive net income. Just to rephrase that, 5 consecutive years of positive net income for Nucor versus US Steel, which did have a negative quarter here at the end of 2023. So 4 to 5 quarters positive. And if we look at the net income annually, 2019 and 2020, a negative year for Nucor. So 3 out of 5 years positive. And that just makes it pretty clear that Nucor a little stronger here when we look at the fundamentals. Div yield is also better than US Steel's. I think it's double, and the PE ratio also better. So although US Steel making some moves and maybe there's an opportunity there because of the drop, my preference would be Nucor over US Steel based on the chart and the data we just reviewed. So let's take a look at open positions and just a quick review here. WTF, no new trades, and that could change after today or this week. We might see some signals if the market pulls back a little bit. No surprise for me anyway that we didn't get any new opportunities for today with Friday finishing strong. If we look at potential, or not potential, but trades that we are in, BP, a trade that I'm in, and with that drop in crude oil, BP taking a hit today, not able to sell calls right now, and holding this one, waiting to see this bounce back. I mean, that crude oil move could be a little bit exaggerated, and we'll just have to see. I saw 33.50s were available where you could get 30% annualized, but I need to be a little bit higher than that. So no trade for me there. CSIQ with the broad market sitting near these recent lows here after earnings. Nothing to do there. Halliburton, also an oil and gas play. This one finding some support maybe around 30, but down just like BP and other oil and gas stocks. Coals, on the other hand, bucking the trend here. Coals, nice rally. This is one that Marcus owns at 2150. And let's do this. Let's go over to PowerX Optimizer and actually look at the wheel analyzer and go over to the calculator here. And if we look at coals right now, let me slide over. We could see what type of premium is available. And right now, 46% annualized at the 2150 strike. So not bad there on the premium side for anybody looking to sell calls at 2150. Premium's weak at 22 for this Friday, but 2150 or 21 actually is outstanding if you got in at a slightly lower strike than Marcus. I do know that we had quite a few traders get in between 20 and 2150 in this zone. So some really nice premium in coals right now with this nice move higher, almost 5%, 4.7% higher today. Merck started out strong, and I know some traders were able to sell some calls on Merck. Marcus got in at 120. I did not trade this one. I also know that we had some mastermind members trade the 118 and between 118 and 120. Some were called away on Friday with that close at 118.45. Others were selling calls today. A little bit of a reversal here with the broad market down 1.2%, but definitely an opportunity to sell calls this morning. UPS just real quiet today, not doing much, opening slightly lower, actually trading higher than we began the session, down just 0.4%, trading in this range now, nothing to do with UPS. So overall, market's down, and the focus we know is jobs this week. So we will see what the job data shows, but more importantly, how the markets react. And it could make for a pretty eventful week. So looking forward to a great week of trading and ready to take some opportunities. Now, I hope everybody enjoyed the long weekend, and if you are in the U.S., I hope you had a great Labor Day. Hope you had an opportunity to spend some time with friends and family, maybe barbecuing. And this is something that Marcus and I always like to do. We like to grill, and Marcus loves his fillets. I love my ribeyes. But I was thinking, and I never understood why vegans dislike me so much. I've never had any beef with them. All right, snuck in a little dad joke for you. And with that said, hey, if you like this video, please give it a thumbs up. If you're new to the channel, please subscribe. And if you know someone who could benefit from these videos and recaps of what's going on in the markets and how we're trading them, please share our channel. With that said, I'm going to be joined here by Marcus tomorrow. So we'll be back together tomorrow. And until then, happy trading, everybody.